when we talk about shorts or longs or this and that, whatever, I talk about it in terms of like kind of exposure. Last night on Fast Money, we were talking about Nvidia, and we were saying with the stock at 275, if you looked at the money put, okay, the 275 put in April, that was about 3 weeks from now, it costs you about $10. You can do the math. That's just below 4% of the stock price. That's the break even that you would need. Now look at the stock; it's down 3.5% today. That's how I think about trading, right? I think about it as like, what is the risk versus the reward if I were to buy an at-the-money call or a put? Here's the Nvidia chart here. You see this headline about Google saying that its AI computer is faster, greener than Nvidia's, and maybe that's the excuse to sell the stock down 3.5%. We don't really have to go into it, but I like to think about like trades in terms of what am I risking and what's the potential reward. And if these guys can throw up the XLF, I think this is really important because on the 14th, next Friday, by 5 or 6 of these names that make up a good portion of this, if you were to look at the options market, okay, and let's say this ETF is trading at 31.80 right now, I just bought the April 14th expiration. They're going to expire on that afternoon. Okay. The April 14th, 31.5 puts. I paid like 33 cents for those. Okay. So you can do the math. That's 1% of the ETF price. And it breaks even if I paid 33 cents or whatever it was, it breaks even at 31.18. That doesn't seem like so far from here, a couple, 2.5% or something like that. So that's the way I like to trade these sorts of events and understanding that I'm risking what I'm willing to lose.
Yeah, and I don't know if we're able to do this, so I apologize ahead of time. I actually took a law school class, and one of the first things you learn is before you ask a question, you better know the answer. However, if we could do a longer term XLF chart, you will see that level of support that you cite was a level of resistance back in February of 2020 before the world came cascading low. Look at them, man. Johnny on the frickin' spot.
Yeah.
So that level that you've outlined there, Nathan, is the exact right level. And in terms of Nvidia, if we could just put that back on, you don't think you're going to see more and more headlines like that? You think the Nvidia is the only frickin' game in town? They told a great story last quarter, and the stock has more than doubled since the October low. So that's great. But this is not a cheap stock. And I am telling you, in the history of chips are something, Dan, that become commoditized very quickly. And it's, to me, it's just a matter of time before this happens as well. So it doesn't mean it's not a great company, but it's certainly, in my opinion, shouldn't be trading 20 times revenues and probably close to 40 something times EPS. But that's neither here nor there. So I like your trade. And if I may, before we bring in Dubs, anytime you get a couple standard deviations away from the 200-day moving average, which is what we are now, these things become mean reverting at a point. So there you go. That's my 2 cents.